Good morning and welcome back to another pipeline trading video. Hope everybody's doing great today. So I want to go over a few things that I'm just watching. Today's more of a day to be a spectator. We have the Fed speaking and I think the market's more or less looking like he's pricing in a no rate cut. We're going to see what his tone is. And this might be his last meeting. And there's a few things that I'm seeing that it's just a really tough market to call. As you know, I was expecting this market to come, back down to the 61.71 level on the S&P and the Qs, which was 22. Well, no, this is a Nasdaq 22,464. Got close, but did a V-shaped recovery. So now we're going to see, is this going to be, because this is an impulsive wave in the market, are we going to go up, get a healthy pullback, hold support, and then make a new high? Or are we going to just curl down and wipe everything out? So the levels I'm watching, and I had them in my last chart where I put targets, but they're based off of these moving averages and the fib levels. So now that this is an impulsive move up, and we're starting to hear and see the market's more on the greed side overall, which is concerning. And then we also have the inverted yield curve, which I'm going to go into. So really what you'd want to see, if this is going to be a continuation, is a shallower pullback. You don't want to see a massive pullback down to these levels, because you would be breaking key support. And I'm going to show you what I'm talking about. So if we go to gold, I was telling you in the last few weeks that gold is looking like an ABC correction. We're going to go back down to 4,000 or lower, which some people are saying we already have that support and this is going to rip up. I wasn't in that camp because we're breaking the 20-day EMA. And this is on the weekly chart. If you go to the daily, you're even seeing it. We went up. We broke above the 50. It almost crossed the 1020 above and the price above 50. And then look, just curled back down. So between 4,000 and a bit lower, 3674 is where I'm anticipating. And it doesn't mean that we can't come down here before making another rip up, because overall, long term, you're going to see gold prices over 5,000, well over 5,000, probably in the camp of 10,000. Just the way they're devaluing the currency, printing, and things aren't going to be getting any better. And if you don't believe me, there's a book called Principles for Dealing with Changing World Order. If you like history like I do, it's something to read. It's an eye-opener, because this is history repeating itself. And there's a lot of ignorance out there when it comes to countries, how long they've been in play, the fiat currency system. And another great book to read is A Creature of Jekyll Island. And I read that book side by side with the House of JP Morgan, which is very interesting, because the House of JP Morgan leaves out a lot of interesting details that the other book covered that they don't want you to know about. So these are great books to read if you're into that stuff. But we were talking about oil, and I said oil was holding the 50, and this could be a head and shoulder, right? You're seeing it right here. I'm just going to draw this out for you in real time. We have the one shoulder, we have the head, we have the neckline, and we go, right? Overall, based off of, again, history, when you've had spikes like this with oil, when all the chaos is all said and done, oil plummets. So over a longer period of time, I expect oil to go down fast and furious. But right now, one thing that I'm watching very carefully is I want to see if we get exhausted. What are we doing at these levels? Because I was saying oil is going to go to 120 again. maybe even higher. And the only reason I'm basing it off of this. Like we had a massive breakout. Things were way worse with oil with the Russia-Ukraine war, because that's what you're seeing here. And we're at those levels. So I would expect on the weekly, like, look, we broke down, touched a 20 EMA, and broke right back above. And a lot of people are saying oil's going to plummet. And maybe they're referring to this move down, which that would have been a good call for a correction. But overall, if you go on the weekly time frame, you have an A, B, and then the last wave should be C. And we could go to above 120, even up to 145 with these um, order blocks. So if that happens, that also goes in tandem with the market having a massive pullback. So keep an eye on oil. That's huge. And things aren't looking like they're getting any better. Everything, again, is news driven. One day we're in talks. It's going to be, a revolutionary deal, and people are going to have peace and all this stuff. And next, it's like the blockade's back on. They're saying they're not actually talking about stopping anytime soon and surrendering. Trump's saying that their whole military is destroyed. Who knows? And if you remember, again, history, look at World War II, like the propaganda, right? They're not going to tell you the playbook and what's actually going on. And I don't know how long this is going to last. But to say that it's going to end next week or the week after would be naive, because nobody knows that. So let's move on. I'm going to go into the VIX. We're looking like the VIX might get a spike. This is on the 3-month. I could go to the monthly. Oh, no. So what's interesting is on the ISM purchasing band, this is showing that money's still flowing into the market. And if you remember, when we're at, and this is another reason why I'm kind of changing my thesis with the overall market, did we get the blow off top? And I've had to question my own thesis because, yeah, I expected things to correct a little bit deeper. However, this one chart here is telling me a different story, because when the market is at an all-time high, the ISM, the index for purchasing managers, so this is the big money, you could see is way up here. Look at you had COVID, right? 21. And then we went down, had the double, top, but that went to 64.71. If you want to look at, look at this, 85, 72, right? Those are years I'm referring to. Like when the price gets above 56, then you know that we're really close to a top. And we just broke above the 52, and you're seeing a lot of the big companies. Why I say it's a really hard market to read is we're in a territory that's never happened before in history. You have AI. So you have a boatload of money going into investments in AI, while at the same time risking unemployment spiking. And then at the same time, the overall economy could actually have a stronger GDP because they're going to be more productive. So again, now if I like, this is why it's amazing, because if I take you now to where is it? I had it up here earlier and now it's gone. Let me see if I can pull this up. If you look at the 20 and the 30-year yields, these are going up. And if you're saying why, it's because of the 10-year. So this is fascinating. This is another thing where I was talking about the inverted yield curve. Right now, this is showing that rates are going up, not down. And we all know what happens when rates go up. The market takes a massive pullback. So I've been watching this very closely just to see the pattern because I don't see very many channels talking about this, or analysts, I should say, in the sense of like, this is a big concern. Everybody, for some reason, is convinced that they're going to be lowering rates because that's what Trump wants. This chart shows something different. This is showing right now, if you look on the weekly, we are above. The 10 has crossed the 20, prices above the 50. We could get a massive spike up because I want you to think of it like this. If I said to you, I need to borrow money, I'm going to give you 5% interest on a 10-year contract. And then somebody else comes in and says, hey, I'm going to give you a 5% interest on a 30-year term. So your maturity is going to be in 30 years, where basically I could get my money back after 10. Which one would you take? Clearly, you're going to take the 10-year at 5%, because why would you want to lock up your money at 5% for another 20 years? You're getting the same rate with literally two-thirds of a shorter duration. So that's a signal to a recession as well. And then I've talked to a lot of people that, they're in their 60s and really successful. And, they're really concerned that this is going back into the 80s, 90s. And, they always say that the generation today, people that are in their 40s haven't experienced that. And rates went sky high. So it's interesting to hear the different perspectives. And, you're seeing it in the housing market throughout North America. You're hearing one thing, but then when you talk to people, they're showing and telling you a completely different story. And if you look and say, there's no way, this is something I was watching that I was like, that's pretty, like, we were in a downtrend for quite some time with rates. We now broke above these rates, right? This downtrend. If you think there's no way we could go back up here on bonds, think again. Think again. Just because you haven't seen anything like this in your lifetime, because you're younger, doesn't mean it can't happen. And that's what I talk about, being naive and being ignorant. And this is where, when it does happen, people panic. So just have that in the back of your mind. Don't rule it out 100%, because you don't know. None of us do. And there's going to be markers and signs to keep your eye peeled for. And there's a few other things I'm going to go over before I end this. I've seen a lot of people get bullish talking about the weekly, that the weekly close above the 20 EMA. And yes, it did, but barely. What's concerning is, let's see what this week does. Don't say we had 4 weeks of green, we got rejected right away, now we're above. Let's see what this week does before jumping to conclusions. Because if it does go above and it's holding, which it looks like it is right now, and the sentiment is neutral, yeah, we can make our next leg up to the 50 day EMA. Now, if I go to the monthly chart, this is where a lot of people are getting bullish, because we are holding the 50-day EMA. And they're not wrong. They're not wrong. There is a possibility that this is the bottom and we can make another leg up. If this gets above and goes above the 20 EMA on the monthly chart, then yeah, that we could get a blow off top and we could go to 142 and up. And if you're saying, where did I come up with the number up here? This is a fib extension that I just had in from before. But those are levels that we can absolutely get to. But we would have to break above the 98, like I said, because right now we have lower lows and we have lower highs. So let's see. Don't jump to any conclusions yet, because even when I go to the 3-day, which I made a video a while back when we had the death cross over, where was the death cross? Trying to think of the death cross was over here, right here. And I was expecting a bigger pullback, right? Because that's typically what happens. But at the same time, when you have a death cross and you have a massive pullback, you're closer to a bottom, which is what I was saying. However, if you look at this, we're getting rejected at the 50-day EMA. And, the sentiment again is in favor of the bulls because we're not in the greed zone, not even close. We're neutral. So the fact that it's holding up here, we still have some patterns that are bullish, but in the macro scale, they're in a bearish flag, right? So, like, you have the cup and handle. So let's see what it does. Right now, the next few days are going to be very telling. Are we going to curl back over? And all of this basically, it all gets erased. And if you're thinking, well, that would be quick, it happened here, right? Things were looking bullish. We were holding above the 20 EMA, went up. And if a lot of people, because a lot of people for quite some time, including myself, are very bearish, I'm seeing the bear flag. I'm seeing the market sentiment. It's not like people are really running out there spending money. Their debt's increasing to levels greater than the housing crash. That's insane. So people both on the American side and Canadian side, I'd probably argue the Canadians are even feeling it more with cost of inflation for groceries. I think we have the highest inflation out of the G7. No one's really looking at that and talking about it. There's an article and a podcast I listened to with one of the biggest mortgage brokers, and he was saying it's impossible for somebody to save for a down payment at the prices they are today. It doesn't even make sense anymore because your property tax is increasing. For some of these houses, property tax are 9,000 up to 2025, and you're not even talking anything fantastic. They're just regular builder grade subdivision homes. It's insane. It doesn't make any sense. And delinquencies are going up. Power sales are skyrocketing. There's so many deals. There's a deal I just heard about in Florida on a condo, and there was three mortgages and a whole bunch of other stuff that and the guy who has the three mortgages is the one trying to call the shots on what he wants to get for the pricing. The market doesn't make any sense. So just don't jump to any conclusions. Let's see. If I go to ETH, this isn't good for ETH. We're broke the 20 EMA, right? Everything on the indicators, and keep in mind, indicators are lagging. That's why you always want to watch price action. But price has been going up. I don't know why this is. Oh, it's saying there's no gaps. I don't care about that. Why is that there? Let me get rid of this because it's really annoying me. Okay, there we go. What's interesting about this is we have a massive amount of orders down here. Remember, we're talking about liquidity. Doesn't mean that I don't think ETH is going to go up over a longer period of time, especially because they're talking about this being the rails. BlackRock's talking about it at the World Economic Forum that they want to digitize. I shouldn't even say they want to, they already are. They're going to make all equities, private equity, anything in that vicinity. They're trying to get it to be tradable 24/7, 365 on a blockchain where it's basically real-time audited. Which is a big deal, right? So you're going to be able to see things, more transparency, and the technology is way better. It's funny how technology in our society has jumped leaps and bounds, but our entire financial system has a 30-year or a 20-year lagging tech It blows my mind how that's even possible, considering how much money is in the financial markets and how much money the banks and the big firms have. And you'd think, well, why wouldn't they upgrade, the system? That's something for you to come to your own conclusion. Mine is uh, more of the conspiracy side, where they don't want to because it's easier for them to control. Plain and simple, right? If everybody has the same access to things and the same movement that they do, you're risking their profits because they're clipping off fees every time you transfer or anytime you convert a currency, especially if you're moving money from here to another country. The fees are outrageous, and you wonder, what am I paying for? You literally sit there and question, like, I don't understand what I'm paying for. Because if I have other systems that are available right now where I can literally transfer money in real time and get a notification in less than 3 seconds that the money's been transferred to a different account, how is that even still possible today? So this is where ETH over the long period, I think, is going to have a pivotal role in the blockchain world. So overall, long term, I think ETH is going to go up because we didn't really get a massive run like you did with Bitcoin, especially knowing its use case, right? Bitcoin's a store of value. That's great and all. You're not really going to be purchasing anything with Bitcoin because of the gas fees and everything else. Store of value, sure, you have 21 million coins, you can't create any more of them. And I believe, if my memory serves me correct, what I was anticipating for is Bitcoin's halving is in April of 2028. Typically, what you would see based off of me doing all these logs on timing and everything else from the last 10 years, I would expect the bottom in Bitcoin to be somewhere closer to the end of Q3, Q4 of 2027. Typically, it would be close to a December area. That's what I was more or less expecting. And the charts are still telling me that this leg down, it doesn't look like it's quite over yet to me. But can I be wrong? 100%. A part of me hopes I'm wrong. So I hope I'm wrong, but I'm trading as if I'm right, um, because I have to do that. I have to do that to save. It's risk management. To be 100% bullish right now and jump on that bandwagon is foolish. Let it confirm. Let's see how the meeting goes today. Today's a day, like I said, you're going to see a lot of volatility. But when I look at this, I'm not seeing anything positive yet. The indicators are doing what the indicators are supposed to be doing on ETH, and this is on the weekly chart. We got rejected at the 20 EMA. So right now we're in between the 20 and we're holding the 10, right? That means nothing. Right now, this to me, considering we're in a bearish flag and we're getting rejected at one of the biggest, moving averages, the 20 and 50 to me are the biggest, says a lot. And it's not bullish. Not yet. If you go to the monthly, like, again, this is what I don't understand, how people are so quick to jump on something. We broke the 50-day moving average, right? We're now getting rejected. If we got a candle like this, we broke above the 50 and then held it, you have my support. I would convert to a bull. But there's a fair value gap. So this is simply could be a B, C pullback, right? Or that was it. This was the bottom right here. But don't jump to that conclusion yet. And let's see if it gets above these levels and curls back up, right? You know that I'm in BMNR and been trading it. Here are some numbers too, right? We had a 82% correction on this one. We had a 62% pullback here, and we had a 64.8 pullback here. So could it be done? Absolutely, it could. But it's not there yet. We haven't broken above the 50. If we break above the 50 and all the indicators curl up and look at volume, this is actually, and I get why people are more on the bullish side here because prices have dropped and the volume has dropped, right? Typically, you want, if you're going to be thinking it's going to, plummet, you're going to see prices drop and volume increase, right? So that's another one. If we go to BMNR, which is something I've been doing, this is playing out exactly like I put in the videos. And so far, so good. I will be covering my short and my cover calls around this level. The short, I'm going to leave it a little bit longer because if we break it, it's going to go down. And I want to catch this leg, right? So I'll see that. And like I was saying, you short up here, put a tight stop. Don't put your stop just right above here because the institutions are going to be looking at this level. They're going to be looking at 23.48, knowing that there's going to be stop losses up here, right? So they're going to be buying anything from 23.38 probably up to 24.50, 24.60, right? If they need the liquidity, depending upon what type of size they're playing with. But again, on the daily, BMNR is very bearish right now. All the indicators cross. We broke the 50, and now we broke the 20. So we're going for a ride down. Now, how far can this go? This is a measured move. If we break out of this channel, that brings us at 1476, right? Now, one thing to keep in mind is if you pay attention to BMNR, it's either lagging or front running ETH. So you would have noticed the other day, ETH was up 2 or 3%, BMNR was down. So try and keep an eye on that because this tells you kind of where the prices are going before it happens in a way. And I could be wrong with that, but it's just from my observation what I've noticed. Because like here's a perfect example. ETH is positive today and BMNR is down almost 4%. So explain that one to me. And if you're wondering what I'm using for my short, I'm using 2 times leverage. I'm using BMNZ. So today it's up 8%, which is great. And this again, I expect this to go potentially, well, the next stop is going to be at like 18, 19, 19, 14 area, roughly. We should get a squeeze up. But one of the things that I'm really watching, and again, this is inverse, right? So when BMNR drops, this goes up. But this is actually, in a way, bullish because this is descending. So when you get a descending and you break above, that's the opposite of a bear flag, if you remember what I was showing in those videos. So this is where, again, I'm just doing this really quick in real time. But if you look at, oh, my mouse is stuck. Depending upon where you break out, so I'm just going to say we break out over here roughly, that would put this at a target of $26. Right. So you do the math on the return. Today's just one day, it's up 8%. So when you play it like this, and again, have a tight stop, because again, the markets are unpredictable. The moment you think you have one over it, it gives you a little slap in the nuts. So that's it for today, guys. If there's anything else that I'm missing, I'd love to hear your feedback and get other opinions on what I could be missing and why. I always like to challenge my own thesis and what I believe, and it either will give me more conviction on what I'm doing, or it will make me rethink a few things, go back to the drawing board and see Because if I don't have the conviction, I'm not going to put it on, right? I'm not going to put the trade on or the swing trade or whatever it is that you're doing. But as always, stay disciplined, trade with intention, and God bless you all. Have a great day.